What happens if they cut more staff?
They already got rid of all the casual staff. They have put a pause on the expansion project last month. Now, everyone's pretending not to panic.
Alex wasn't meant to hear that conversation, but once you hear adults talking like that, you stop feeling like a kid for a while.
The central bank increased interest rates today as they continue its fight against inflation. Economists now expect unemployment to rise as higher interest rates continue to slow the economy.
Wait, people lose jobs because interest rates go up?
Yeah, just not immediately. That's what makes it scary.
Wait, why would unemployment rise now? We had an interest rate increase a few months ago and everything looked okay.
That's what makes interest rates dangerous. They're what economists call a lagging indicator, which basically means the damage shows up later. At first, nothing looks broken. People still go to work, shops still open, restaurants still look busy. But underneath the surface, families slowly tighten their spending, which means businesses slowly make less money. Managers, owners quietly panic and have to make tough decisions. First, overtime disappears. Then expansion plans get canceled. Then hiring freezes. Then casual workers lose shifts. And finally, months after interest rates already went up, the unemployment numbers start rising. That's why economic downturns can feel so confusing, because by the time job losses appear publicly, the economy may have already been weakening quietly in the background for a long time. At first, the changes were subtle. Families bought less, people stopped ordering takeout, cafes became quieter, stores became emptier. Stores going on sale more often to attract customers. Even Alex noticed it at his casual job. Shorter shifts, less customers, managers looking stressed.
Hey, Alex. We have to cut your shifts. Things have slowed down. I will give you a ring when things pick up again.
That's how downturns usually begin. Not with panic, with reduction, small cuts, small hesitations, small fears quietly spreading through thousands of businesses at the same time.
That's so rough. I'd be so angry if they fired me.
Honestly, I was at first. But then I saw one of the older guys almost crying in the storage room. He's got kids, bills, a mortgage, and I kind of realized if someone had to keep their shifts, I'd rather it be him than me.
That was a strange moment for Alex, because losing the job still hurt. He felt embarrassed, rejected, stressed about money. But for the first time, he also understood something bigger. Economic downturns force businesses into horrible decisions. Not evil decisions, just survival decisions.
Several major companies are now announcing hiring freezes. Businesses are warning of weaker consumer demand. Economists now expect unemployment to rise.
They are talking as if people losing their jobs should be expected, like it's normal.
Because it kind of is. The central bank actually expects a certain level of unemployment.
What? That sounds insane. How is that fair?
Okay, this sounds harsh at first, but hear me out. It's not that the central bank want people struggling. It's because if unemployment gets too low, the economy can start overheating again. Think about it. If basically every business is desperate for workers at the same time, companies start fighting over staff. They offer bigger pay, better perks, higher wages to employ them. Sounds great at first, but then businesses raise prices to pay those wages. Then workers need even higher pay because prices got more expensive. Then businesses raise prices again. And eventually, inflation starts spiraling.
So they're trying to stop the economy from getting too hot, even if it means some people lose work?
Yeah, that's the harsh balancing act. Central banks know zero unemployment sounds amazing politically, but in reality, economies naturally have people moving between jobs all the time. Some people quit, some get laid off, some businesses shrink, others grow. Students finish school and start job hunting. People move cities, industries change. Technology replaces certain roles. So, economists believe there's a natural level of unemployment, where the economy stays relatively stable without inflation exploding. Not perfect, not painless, just stable.
But that still feels brutal if you're the one losing the job.
Exactly. That's the difference between economic theory and living through it personally. Because when economists talk about unemployment percentages, they're talking about numbers. But inside those numbers are real people, parents trying to provide, teenagers trying to help their families, workers terrified they won't find another opportunity. And another thing most people don't realize, the unemployment rate doesn't tell you how people are struggling. Some people still have jobs, but lose overtime. Others lose shifts. Others accept fewer hours. Some take lower paying work just to survive. So even before unemployment rises officially, fear is often already spreading quietly through the economy.
So by the time everyone notices unemployment going up, families have usually been stressed for a while already?
Pretty much. That's why economic downturns can feel slow at first, then suddenly feel like they're everywhere at once. That's the uncomfortable reality most people never hear explained clearly. The goal is not zero unemployment. The goal is balancing inflation without collapsing the economy. Meanwhile, Alex's dad had seen the changes at his work. He saw his company canceled expansion plans, then hiring stopped, then overtime disappeared. Contractors were quietly let go. There were anxious and nervous whispers amongst the workers, whilst everyone was pretending things were fine, even when things clearly weren't. Because businesses rarely panic openly, they cut slowly, step by step.
Hey, you're home early.
Yeah. It happened. I got laid off.
And just like that, the fear became real.
Dad, I'm sorry.
Hey, bud. None of this is your fault. It's just life, the economy, how business works.
This is the part people misunderstand about unemployment. Many good workers lose jobs during downturns. Hardworking people, reliable people, experienced people. Sometimes companies simply run out of money, or customers spend less, projects slow down, losses build up, and eventually payroll becomes too expensive. Economic cycles do not only hit lazy people, sometimes they hit ordinary families trying their best.
We have savings. We'll be okay for a while.
Yeah, I know. I know we'll get through this. But losing your job messes with your head. You start wondering if you failed somehow, even when I know it's just the economy.
That's something teenagers don't always see immediately. A lot of adults carry fear quietly, so their kids don't have to carry it too. That fear crushes a lot of parents silently, not because they care about status, because they want stability, protection, security for the people they love. And when income disappears, many parents feel guilt before they feel anger. The hardest part came next, trying to find another job during a slowdown. Because when economies weaken, many businesses stop hiring, all at the same time. Suddenly, hundreds of applicants compete for fewer openings. People who never struggled finding work before start hearing silence. People who were paid six-figure salaries were willing to take any job, and still there were no callbacks, no interviews, no security.
Ever since Dad lost his job, I keep thinking about something. If the economy slows down this badly, why do any jobs still exist? Like, why doesn't every business just collapse?
Because not every business gets hit the same way. Some businesses slow down hard during downturns, others barely notice, and some actually get busier. People might stop buying expensive shoes or holidays, but people still need food, still need electricity, still need medicine, still need supermarkets. That's why some jobs are considered more recession-proof, because even when people are stressed financially, certain things are too important to stop paying for.
So businesses connected to essentials survive easier?
Usually, yeah. And another thing, some businesses actually keep operating even while losing money for a while.
Why would they do that?
Because shutting down completely is too drastic. It doesn't mean it's a bad business. It just means that it's just tough times, and you expect things will improve later. So they try to survive the downturn first. They cut costs where they can. They cut expansion, hiring, overtime, then contractors, then staff. Businesses usually don't go from healthy to dead overnight. They slowly try to stop the bleeding.
That's another reason recessions feel so emotionally exhausting. People spend months sitting inside uncertainty, wondering if things will recover or get worse. And during that period, entire families start changing how they think about money, risk, and security. Weeks passed. Alex's dad kept applying for engineering jobs, but the economy had slowed hard. Projects were getting canceled, construction was slowing, and every day felt the same. Job applications, waiting, silence. One night, Alex walked past the kitchen and saw something on his dad's laptop. A supermarket job application, shelf stacking, night fill.
They are opening a new store 30 minutes away from home. It is a bit further, but they are hiring for the whole store.
What a lucky break.
Downturns can damage more than finances. They can damage pride, identity, confidence. Especially for adults who spent years building careers, only to suddenly feel disposable, replaceable. But Alex was starting to understand something important. During hard times, adaptability means survival. For the first time in a long time, Alex felt guilty spending money. Not because his parents told him off for spending, but because uncertainty changes behavior. He stopped buying random snacks and ate at home, stopped impulse purchases, started asking himself if he really needed it. That guilt came from watching stress slowly enter the house, watching his mom calculate groceries more carefully, watching his dad stare at job applications late at night, watching small conversations always about money. For the first time, Alex realized financial pressure changes how a family feels emotionally. Not because people become greedy, or weak, or irresponsible, but because uncertainty makes humans protective of money, protective of security, protective of the people they love. Most people hear words like unemployment, recession, economic slowdown, and think about statistics, but behind every number is usually a family trying not to panic, a parent lying awake at night, a teenager pretending not to notice stress at home, a worker questioning their value after losing a job. And sometimes, good people get hit by bad economic timing. Alex reflected, even though things was stressful the last few months, Alex's family was okay. Not because they were rich, not because they avoided the impact of the economy, but because years earlier, his parents had quietly built financial breathing room. They built emergency savings just in case. And now, that preparation was buying them something incredibly valuable: time. Time for Dad to look for work without panicking immediately. Time to keep paying the mortgage. Time to protect the family emotionally while things were uncertain. That's the strange thing about saving money. Most of the time it feels boring, pointless even, until the moment life gets hard. And you realize savings are not really about becoming rich. They're about creating stability when life becomes unpredictable and hard. Because downturns expose something most people ignore during good times: how fragile stability can really be. But Alex noticed that his friend's family was doing during this downturn. They were investing. So, why would anyone invest when everything's collapsing?